In the fast-moving world of crypto, every move matters. And right now, Bitcoin is at a critical point. The question on everyone's mind is, are we heading for a deeper correction, or are we simply resetting before a powerful breakout? In this video, we'll walk through the key on-chain metrics, whale activity, and technical analysis, all to help you understand where Bitcoin is really headed. If you care about where your money goes, stay with us till the end. As of today, Bitcoin is hovering around $103,000, right under a major psychological resistance at 105K. Over the past few weeks, price momentum has shown signs of slowing down. The candles are smaller, the volume is thinning, and more importantly, indicators like the RSI, the Relative Strength Index, are sitting in the overbought zone. That's usually an early sign of a possible short-term pullback. But this isn't the full picture. Let's talk about what the whales are doing. These are the big players, institutions, early adopters, and high-net-worth individuals, and their behavior often predicts the next big move. Right now, they are not selling, right? They're accumulating. Large amounts of Bitcoin are being quietly moved from exchanges into cold wallets. When that happens, it's usually a sign that smart money is betting on a future price surge. So while retail traders might be waiting for the perfect entry or exit, the whales are quietly stacking, and that alone should make us pause and pay attention. At the same time, exchange flows are telling us something powerful. We're seeing consistent outflows from major exchanges. That means people are taking their Bitcoin off platforms like Binance, Coinbase, and Kraken, moving it into personal wallets where it's less likely to be sold in the short term. It's a classic signal of long-term conviction and reduced market liquidity, which, when paired with rising demand, sets the stage for future price increases. We also need to talk about the behavior of long-term holders, the so-called diamond hands. These holders have been through multiple cycles. They've seen booms and crashes, and they're not easily shaken. The latest data shows that they're holding on tight. No panic selling, no exits, just quiet confidence. This further supports the idea that despite short-term noise, long-term sentiment remains bullish. Now, let's dive into the technical side of things. Bitcoin's RSI being overbought isn't necessarily bearish, but it does mean the market may need a breather. The MACD, another momentum indicator, is showing bearish divergence. That means while prices are climbing, momentum is slowing down. Historically, this kind of setup leads to short-term corrections. Those corrections often bring price back to key support levels before resuming the uptrend. And where are those support levels? Look for strong buying interest around $92,000, with deeper support near $85,000. If Bitcoin falls into that zone, it could be a great opportunity for accumulation before the next leg up. On the upside, resistance remains at 105K to 110K, and breaking that range would likely require significant buying volume and perhaps a news catalyst such as ETF inflows or regulatory developments. But what about investor sentiment? The Crypto Fear and Greed Index is currently sitting in the greed zone. That means people are optimistic, but not yet irrational. We're not seeing extreme euphoria, and that's a good sign. It tells us there's still room for growth without triggering a major bubble pop. Behind the scenes, institutional adoption continues. ETFs are gaining steady volume. Large financial firms are slowly entering the space, either directly through Bitcoin or indirectly through blockchain infrastructure. Regulatory clarity is improving, especially in the US. And while uncertainty still exists, the overall direction is moving toward legitimization rather than restriction. Now, zooming out, what does all of this mean for the rest of 2025? Historical cycles, on-chain models, and expert predictions all suggest that Bitcoin has room to grow, possibly reaching $150,000 or more by the end of the year. This isn't hopium. It's based on real patterns, having cycles. Supply shock, increasing adoption, and macroeconomic pressures driving people toward hard assets like BTC. So how should you approach this market? If you're a short-term trader, the signals are clear. A correction is likely. It could be an opportunity to take partial profits, place hedges, or set buy orders at lower support levels. Be cautious. Use stop losses. Protect your capital. If you're a long-term holder, the strategy doesn't change much. Keep dollar cost averaging, especially during dips. Don't chase pumps. Let the market come to you. And if you're new to crypto, the best advice is focus on education, not emotion. Don't just follow hype. Learn the fundamentals. Understand what you're investing in. And most importantly, invest only what you're prepared to hold long term. To wrap this up, here's the core message. Bitcoin may correct in the short term. A drop to the 85,000 or 92,000 level would not be surprising. In fact, it may be necessary, but the long-term trend remains bullish. Whales are accumulating. Exchange outflows are rising. Supply is tightening. And demand, both retail and institutional, continues to grow. This is not financial advice, but if history is any guide, Bitcoin is setting up for something big. Thanks for watching. If you found this video useful, don't forget to like, subscribe, and turn on notifications. We've got more deep dives, real-time data updates, and expert insights coming your way every week. Stay smart, stay informed, and stay ahead in crypto.